OPEC's bold move squeezing supply as elections loom. OPEC, the cartel of oil-producing nations, has made a move. They've decided to cut oil production significantly. This decision comes as the world grapples with inflation and an energy crisis. It also coincides with upcoming elections in the United States. The timing is no coincidence. OPEC's move is a power play with global consequences. OPEC's decision is a reminder of its influence. The cartel controls a significant portion of global oil production. By limiting supply, OPEC aims to drive up prices. This strategy has been effective in the past. It allows OPEC members to maximize their revenues. However, it also risks economic instability. Higher oil prices affect everyone. Consumers feel the pinch at the gas pump. Businesses face increased operating costs. Governments must grapple with inflation and potential social unrest. The stakes are high. OPEC's decision has the potential to reshape the global energy landscape. This move is a gamble for OPEC. It could backfire if it leads to a global recession. Alternatively, it could solidify OPEC's dominance in the energy market. Only time will tell what the ultimate outcome will be. One thing is certain, the world is watching closely. The price of power. Why OPEC cut production? OPEC's decision to cut production is a strategic move driven by several factors. Firstly, OPEC aims to boost oil prices, which have been relatively low in recent years. This will increase revenues for member countries, many of whom are heavily reliant on oil exports. Secondly, OPEC seeks to counter the growing influence of US shale oil production. The US has become a major oil producer in recent years, challenging OPEC's dominance. By reducing supply, OPEC hopes to slow down US shale production and regain market share. Thirdly, OPEC is wary of the global economic slowdown. Demand for oil typically declines during recessions. By cutting production now, OPEC aims to prevent a glut in the market that could further depress prices. Finally, OPEC's decision is also influenced by geopolitical considerations. The cartel is seeking to exert its influence on the world stage. By controlling oil prices, OPEC can impact global politics and economics. Global ripples energy markets. Brace for impact. OPEC's production cut has sent shockwaves through global energy markets. Oil prices have surged in anticipation of tighter supplies. This has created uncertainty and volatility in the market. Traders and investors are closely monitoring the situation. The impact of OPEC's decision will be felt worldwide. Countries heavily reliant on oil imports will face higher energy costs. This could fuel inflation and slow economic growth. Governments may need to intervene to mitigate the impact on consumers and businesses. Renewable energy sources may become more attractive as oil prices rise. This could accelerate the transition to a cleaner energy future. However, it will take time for renewables to replace oil as the world's primary energy source. The global energy landscape is in flux. OPEC's decision has created both challenges and opportunities. How the world adapts to this new reality remains to be seen. Election interference or economic strategy. OPEC and the US vote. OPEC's decision to cut oil production has sparked debate about its potential impact on US elections. Some analysts believe that OPEC is deliberately trying to influence the outcome of the vote. They argue that higher oil prices could hurt the incumbent party and benefit their opponents. Others contend that OPEC's move is purely economic. They point out that OPEC has a long history of manipulating oil prices to maximize its own profits. They argue that the timing of the production cut is coincidental and not politically motivated. The truth likely lies somewhere in between. OPEC's decision is undoubtedly driven by economic considerations. However, the cartel is also aware of the potential political ramifications of its actions. It is not inconceivable that OPEC is using its influence to try and shape the outcome of the US elections. Regardless of OPEC's intentions, its decision has injected uncertainty into the US political landscape. The outcome of the elections could have significant consequences for the global energy market. In this section titled Winners and Losers, navigating the new energy landscape, we delve into the implications of OPEC's production cut. This decision creates both winners and losers in the global energy market. OPEC member countries stand to benefit the most, as higher oil prices will boost their revenues, providing a much-needed economic boost. Conversely, oil-producing countries outside of OPEC, such as the United States, could also see benefits. Higher prices may make it more profitable to extract oil from unconventional sources, such as shale formations. However, this could lead to increased environmental concerns. On the flip side, consumers in oil-importing countries are likely to be the biggest losers. They will face higher prices for gasoline, heating oil and other goods and services, which could lead to a decline in consumer spending and slow economic growth. Meanwhile, renewable energy companies could see increased demand for their products as consumers and businesses seek alternatives to expensive fossil fuels. This could accelerate the transition to a cleaner energy future. In Section 6, titled The Green Energy Boom: A Catalyst for Change, we explore the potential silver lining of OPEC's decision to cut oil production and drive up prices. As fossil fuel costs rise, renewable energy sources like solar, wind and hydropower become increasingly competitive. This could lead to a surge in investment and innovation in the renewable energy sector. Governments around the world are already implementing policies to promote renewable energy and combat climate change. The rising cost of oil could provide further impetus for these policies. Consumers may also be more likely to adopt renewable energy solutions, such as electric vehicles and solar panels, as the price of gasoline and electricity rises. The transition to a cleaner energy future is inevitable, yet it is a complex and gradual process. OPEC's decision could act as a catalyst, accelerating the shift away from fossil fuels and towards a more sustainable energy system. The world is on the cusp of an energy revolution, and OPEC's move may have inadvertently hastened the arrival of this new era. OPEC's decision to cut oil production has raised concerns about the future of the petrodollar system. The petrodollar system refers to the dominance of the US dollar in global oil trading. Since the 1970s, most oil transactions have been conducted in US dollars. This system has benefited the United States by strengthening the dollar's position as the world's reserve currency. However, OPEC's move could undermine this system. Some OPEC members have expressed interest in accepting payment for oil in other currencies, such as the euro or the Chinese yuan. If OPEC were to abandon the US dollar, it could have significant implications for the global financial system. The dollar's value could decline, leading to inflation in the United States. It could also reduce the United States' ability to finance its budget deficit. The future of the petrodollar system is uncertain. OPEC's decision to cut oil production has added to this uncertainty. OPEC's production cut comes at a time of heightened geopolitical tensions. The war in Ukraine has already disrupted global energy markets. OPEC's decision adds another layer of complexity to an already volatile situation. Some analysts believe that OPEC's move is a sign of a shifting global order. They argue that the cartel is increasingly assertive and willing to use its power to advance its own interests. This could lead to a more fragmented and unpredictable world. Others contend that OPEC's decision is simply a reflection of the current economic realities. They argue that the cartel is simply responding to market forces and that its actions should not be overinterpreted. Regardless of the interpretation, OPEC's decision has the potential to exacerbate existing tensions and create new ones. The world is entering a period of uncertainty and instability. For the average consumer, OPEC's decision to cut oil production translates into one thing: higher prices at the pump. As the cost of crude oil rises, so too does the price of gasoline and other fuels. This puts a strain on household budgets, especially for those who rely on their vehicles for work or daily life. The rising cost of fuel has a ripple effect throughout the economy. Businesses face higher transportation costs, which they may pass on to consumers in the form of higher prices for goods and services. This can lead to inflation, further eroding purchasing power. Consumers are left with few options to mitigate the impact of higher fuel prices. They can try to reduce their driving, carpool, or use public transportation. However, these options are not always feasible or convenient. The rising cost of energy is a burden on consumers worldwide. It is a reminder of the interconnectedness of the global economy and the far-reaching consequences of geopolitical events. OPEC's decision to cut oil production has created a wave of uncertainty in the global energy market. The long-term effects of this decision are difficult to predict with certainty. However, several potential scenarios could unfold in the months and years to come. One possibility is that oil prices remain elevated, leading to sustained inflation and slower economic growth. This could force governments to intervene with measures to mitigate the impact on consumers and businesses. Another scenario is that the global economy adapts to higher oil prices and growth continues, albeit at a slower pace. This could lead to increased investment in renewable energy and energy efficiency measures. A third possibility is that OPEC's decision backfires, leading to a global recession and a decline in demand for oil. This could cause oil prices to collapse, hurting both OPEC members and other oil-producing countries. The future of the global energy market is uncertain. However, one thing is clear. OPEC's decision to cut oil production will have far-reaching consequences for years to come. If you found this video insightful, make sure to hit the like button and subscribe to our channel for more in-depth analyses on global economic trends. Don't forget to click the notification bell so you never miss an update. Share your thoughts and questions in the comments below. We love hearing from our community and engaging in meaningful discussions. Your support helps us bring more quality content to you, and together we can stay informed and prepared for the future.